All right. Happy Sunday. Thank you for being here. I appreciate you taking the time out of your Sunday evening to be here and learn a little bit about mortgage note investing this evening. I know you have a lot to do to get ready for your week to be successful starting tomorrow. So I just want to thank you for taking some time to spend with me. And I hope that you find a lot of value in this presentation. My name is Brian. As you can see, today's presentation is about mortgage note investing. We are live today. So if you have any questions as we go along, please, drop them in the chat and I will answer them to the best of my ability. With that being said, let's go ahead and get the ball rolling. So first and foremost, again, our title says mortgage note investing. That's what we're here to talk about today. But more importantly than that, we're here to talk about freedom. Okay, we all invest for the sake of earning freedom at some point in our lives. And so, just a few questions to start off. What would you do if you could use your time however you saw fit? So, money's not an issue. Your responsibilities are taken care of. If you could do anything you wanted with your time, what would you do? Would you learn an instrument? Would you travel more? Um, Go back to school? I mean, what would you? How would you spend that time if you could do that? Okay. And the next question would be, what if you knew that you were getting paid every month to live the life that you enjoy? Okay. So, however you choose to spend that time, as you see fit in that first question, if you knew that every month you had income coming in that you didn't have to clock in for, right? You just check your bank account, it's right there, your direct deposit. How would that make you feel? Would you be relaxed? Would it relieve stress? Yeah, are you excited about that? How would that make you feel? And again, you can go ahead and drop your answers in the chat, and I'll shout them out as I see them. And let me know if I'm moving too fast. I do have a delay between my screen and the live stream, so if I'm moving too fast and need to slow down, let me know, and I'll do that. And then the third and final question is, what if this wasn't just a what if? You know, what if I could tell you that this is not only attainable, but a lot closer than you may think? Is that something that would interest you? Okay, give you a couple seconds for that one. Good. So again, the point of our conversation today, the point of this presentation is to talk about freedom. And the bottom line is that passive income is going to be the key to that free life that we're discussing, right? When we don't have to exchange our time for money anymore, which is what we're doing when we go to work, we clock in and we're exchanging our time for money. When we don't have to do that anymore, we can pursue our passions. We can find new passions. You know, we can spend our days with the people we love. We can enjoy new experiences, or get back to some old experiences that maybe we've had to put on the back burner for our responsibilities and whatnot. But ultimately, it's all going to come down to passive income and how that can support your lifestyle. So my goal is to help you create that freedom. Okay. So a little bit about myself as we get rolling. My name is Brian Royster. Again, I'm a professional note investor. I'm the founder of Note Genius. And what I do is I buy predictable cash flowing assets that are secured by real estate, and they generate passive monthly cash flow. So those questions that I asked you in the first slide, those all apply to what I do on a regular basis, right? We're buying cash flowing assets that produce that monthly cash flow, that monthly income that we know is going to come in and we don't have to clock in for. It's secured by real estate, so not only do we have security, but we also have collateral, and we're going to dig into that later, all right? But more importantly than that, I share these opportunities with people like you. And I say this because I truly believe that there's no point in uh, me on this journey to earn my own freedom if I cannot create the opportunity for other people to do the same. Um, and so that's what I'm here for. That's really the foundation of why I decided to go into this business, because I feel like a lot of people could use a strategy like this. I know that we could all use more time, we could all use more money, and if I can be a vehicle to help other people get there, I feel a responsibility to do that. Okay, so again, we're talking about note investing, which is a niche of real estate investing. Okay, and most of us know that real estate investing is considered to be the most efficient way to build wealth over time, right? It's been that way for forever, since humans have been here. If you own the property, if you own the land, you're likely going to be some kind of wealthy at some point in the future, right? But the issue with real estate investing is that it comes with a handful of headaches that uh, beginners aren't aware of, and that experienced investors just get tired of after a while. Whether you're a landlord and you're tired of dealing with managing a property, or filling vacancies and dealing with tenants, or somebody calls you at 2 a.m. to say that their neighbor's being annoying or that the toilet's broken, or God forbid you have to fix a leaky roof or a broken water heater, and there goes several months of your profit, right? Um, Maybe you're a wholesaler or a flipper and you're grinding really hard to knock out these deals, and it's just the competition's getting too heavy. Maybe it's hard to find opportunities, right? Maybe you're tired of just getting paid once off of one deal, then you got to do it again. Kind of eat what you kill kind of situation, right? So I'd like to offer a shift in perspective here and say, how can we invest in real estate by being the bank and not the landlord, right? So how do banks invest, right? Banks do not invest in real estate, stocks, mutual funds, right? I won't say they don't do this at all, but this is not the bread and butter of their business. This is not how they make their money, right? Banks make their money through lending, okay? Whether it's a personal loan, car loan, home loan, people go to the bank, say, hey, I need money for X. The bank says, okay, we'll lend it to you at this interest rate for this amount of time, right? But this is the bread and butter of the banking business. This is how they earn their money. Why? Number one, of course, is the passive monthly cash flow. Okay, think about it this way. Every loan that a bank creates is a new passive income stream. Okay? Banks are giving out hundreds of these things, thousands of these things, right? And people are paying the bank back over time at whatever interest rate is established, right? And it's just hands-free passive cash flow, passive income, right? Number two is security through collateral. So especially if we're talking a real estate loan or a car loan, right? The bank's going to give you the loan and say, hey, if you don't pay this back, we have the right to come and claim that collateral so that we can recoup our investment, right? Or the money that we loaned you. Okay, so banks are comfortable lending out these tens of thousands of dollars because they know that if they don't get their money back, they have a valuable asset to secure their money and go claim if they need to, right? And the third thing is control over ownership. As I mentioned in that last, or a couple slides ago, real estate can come with its hassles, right? And it's great to own a property for the appreciation and such, but if you don't want to deal with the headaches, nobody's calling the bank and saying, hey, come fix my sink. No one's calling the bank and saying, hey, the grass needs to be cut, or the roof is leaking, right? That's not the bank's problem. They have control over the asset. They have control over the asset because of the loan, the mortgage on the property that says, hey, this money is owed or the property is owed. So they have control without ownership. Okay. All of this boils down to a little phrase that we say in the note industry: own the paper, not the property. Okay. It's that simple. Own the paper, not the property. So let's dig into it a little bit and figure out what is mortgage note investing. So as we've said, banks, they give out loans. Some of these loans are to aspiring homeowners, right? Someone goes into the bank, they say, hey, I'd like to buy this home. I have X amount to put down. I need the loan to complete the purchase, right? And what they do is they create a mortgage note for this loan, right? What the note does is it establishes the monthly payment. So you're going to pay this amount. It establishes the interest rate. It establishes the term and all the other details. This is what happens if the loan doesn't get paid. This is, any augmentations or modifications that can happen. So the note establishes the terms of the loan. Typically, mortgages are 15 to 30-year loans, right? I have 20 to 30 here, but you can get a 15-year mortgage, right? And as we said, the property is used as collateral for the loan. Well, what happens is eventually the banks want to give out more loans, all right? And so they look at their portfolio, they look at what they have in inventory, and they say, we've collected on these for the past 5-10 years. We've made our money back, or maybe these ones stop paying and we can't get a hold of the borrower or whatever the case may be. But we're going to sell off these old loans so that we can bring in some capital and give out some new ones at maybe a higher interest rate, or whatever the terms may be for the bank, right? But they're going to sell off their notes to recapitalize. And because they do that, they prefer to have the lump sum of the note. They prefer to receive a lump sum now than the full value of the note later. Now, if they were to wait the full term of the loan and collect all that interest they would collect significantly more than they would. We're just selling the note at a lump sum now. But it's more important for them to have the capital to start out those new loans, right? So for us as note investors, we come in and say, okay, well, if you're trying to get rid of these notes, we'll buy them from you, but I want to buy it at a discount. I want to buy it for less than the amount that's owed, right? So if there's a $100,000 note, I'll buy that from you for 80 or 90, right? Depending on the condition of the note and the history and all that. But at the end of the day, what we're doing as note investors is we're becoming the new recipients of the monthly payments. We are replacing the bank as the lender. Now, mortgages get sold all the time, okay? Typically, they're sold to other institutions. As note investors, we're doing the same thing, but we're buying them as individuals, right? So same process. We're not larger institutions. We're not hedge funds, right? But that's what we're doing here. But it all boils down to the passive income. Again, every loan, every note is a passive income stream. So when we buy these notes, when we invest in these notes, we now become the recipients of these monthly payments. That's money that we get to sit back and collect every month without having to clock in for it, without having to deal with the property, without having to go connect buyers and sellers and things like that. We're sitting back and we're collecting our passive income. So in a nutshell, that's how note investing works. Okay? And again, feel free to ask questions in the chat if you have them. Feel free to tell me to slow down if I'm going too fast. But note investing is considered by those who are aware of it to be the best kept secret in real estate investing. And why is that? Okay. Note investing is considered the best kept secret in real estate because it is one of the only vehicles where you can find all four of these following elements in one investment. Okay. The first of which is being low risk. Again, every note is collateralized by a physical property, by a physical asset. Okay. This collateral secures your investment, secures your money. So if you're going to invest, tens of thousands of dollars into a note or hundreds of thousands of dollars into a note, you want to know that if it goes south, because all investments carry risk, if it goes south, you have something to remedy the loss of your money, right? So note investing provides low risk, it provides security in your investments. The second thing is predictable income, okay? When you invest in the stock market or even traditional real estate, there are a lot of outside factors that can affect your return as an investor, right? The economy, if it's going up or down, the market's going to go up and down, right? Housing markets change depending on where your property is. The property value can go up and down, right? That affects your money in the grand scheme of things. When we're talking mortgages, when we're talking notes, did this income get taxed? Yes. So note income gets taxed just like regular W-2 income, right? So whatever you would collect on your monthly note payments, you would file that on your taxes just as regular income, right? Thank you for that question. Okay. Note investments are contractual agreements. Okay. So it's already established how much you're going to make, how much the borrower has to pay, right? How long they have to pay it, what the interest rate is, what the collateral is, all that, right? And so no matter what happens, in the economy, no matter what's going on in the world, you already have a contractual agreement that says, hey, I'm owed my money no matter what, okay? The third thing is outsized returns, right? If you're looking at a typical stock portfolio, right, we're talking 6 to 10% return on average, which is good, right? And you're accounting for inflation, 6 to 10% on average, which is good. But again, it carries that risk of being hit hard by things that you have no control over, right? There are a million different investment opportunities out there, and I'll never sit here and tell you that, hey, this is going to be the biggest return you'll ever be able to get, X, Y, Z. That's not truthful of me, right? You can receive very large returns, and it's not unheard of. It's actually fairly common. But when you're buying notes at a discount, number one, you're creating equity right off the buy, and we're going to get into that in a second, right? But you're buying it at a lower rate than the amount that's owed, so you're already winning right off the buy. And then number two, you're collecting these passive returns, right? And they generate higher ROIs because you get to set your own buy price, right? So it's not unheard of to get 8%, 10%, 15, 20, right? And depending on how your note plays out, again, we'll tackle this in a few slides and you'll see what I'm talking about. Depending on how your note plays out, your returns can increase based on the borrower's behavior, right? And of course, the fourth and final thing that we all want as investors is passive cash flow. Again, I cannot stress this enough. If you want freedom, if you want that peace of mind, you need to stop exchanging time for money, right? And when you earn passive income, you can supplement your lifestyle, whether that you want to replace your active income with it totally, whether you want to stash that passive income and make sure that you have savings for a rainy day, or you saving up for a new house, or whatever the case may be, right? But that passive cash flow is going to create life-changing opportunities for you, okay? So I hope this makes sense so far. Again, keep dropping those questions, keep letting me know what you're thinking. But what I want to do right now is I want to jump into a case study, and I want to kind of apply numbers to what I'm talking about here so you can see how a note investment actually works, right? So here we have a property that's valued at $142,000, right? The mortgage balance on it is $108,000. There's an 8% interest rate, and there's 15 years remaining, okay? The monthly payment is about $1,000 a month, right? I'm going to speak in round numbers as I go through this just for the sake of flow and simplicity, but you can see the actual numbers on the screen, but I'll speak in round numbers for the most part, okay? So the bank's collected on this note for a few years. They decide they're ready to sell it, and so they offer this note at $89,000, okay? You being a savvy investor, you say, this looks pretty good, okay? I'm going to go ahead and purchase this note, right? So you buy the note at $89K, right? It's worth $108K. There's $108K unpaid balance remaining on it, right? So you've already bought it at a $19,000 discount, right? But not only that, it's collateralized by the property value, right, of $142,000, okay? So again, you've made instant equity right off the buy. You've already won, right? You buy smart. That's the case with a lot of real estate. They say you win when you buy. Same thing here, okay? But that's not all. You're probably sitting here going, okay, that makes sense, but how do I know I'm going to get my money, right? How do I know I'm going to get these monthly payments? And we're going to get into that. I see your question here. What are the cons of having notes? Okay, so before I go further, the cons of note investing are really going to be primarily before you buy, okay? One of the most important things to do when you're investing in notes is due diligence, right? The due diligence process. You want to make sure that the property itself is in acceptable condition, right? You want to make sure that it's standing, that it's not, maybe it burned down a month ago and nobody said anything. So you see old pictures of it online, horror story that I've heard from another note investor, so maybe you want to send a realtor by to check out the property, make sure there's no bars on the windows or any, cars missing tires out front. You want to check out the neighborhood, right? You also want to check out your borrower history, right? You don't want to buy a note and the borrower can't perform and they can't pay, right? And now you've put this money into this note and you're not receiving any monthly payments, right? So you want to do that in the due diligence process. There are note investors who buy non-performing notes specifically. That's not going to be covered in this presentation, but I do have videos on my channel that talk more about that. And we can discuss that, offline if you'd like to have a further conversation. But a lot of your risk is going to be in the buy, right? Again, we're dealing with people, we're dealing with circumstance, we're dealing with life. So the biggest threat to your note investment is just that your borrowers cannot pay, right? Or don't pay. I won't even say cannot because some of them don't. But we'll cover how to remedy that going into this next section, okay? But that is the largest of the cons with owning notes of any kind. So here are the three possible outcomes of note investing. Again, let me say that all investments carry risk, okay? Every investment carries risk. I'm not here to say, hey, this is a magical investment vehicle that you'll never lose and X, Y. That's not realistic, okay? That's not truthful. But what I am saying is that there are only three possible outcomes to a note investment. And when you can predict and plan for what your outcomes are going to be, that makes you a lot more secure in where you're investing your money, okay? So the first of the three outcomes is that the borrower pays as agreed. Okay. The borrower makes regular payments every month. You never have to call them and say, hey, you're late. Hey, what's going on? They know what they signed up for, right? They make their payments all the way to the end of the term, and it's very smooth, right? The second is early payoff. Okay. Um, your borrower is going to either refinance the loan or sell the property. And in order to, be made whole, they have to use some of the proceeds from that to pay off your note ahead of schedule. Um, a lot of notes see early payoff, mostly from refinances, but also from sales as well. But early payoff is a pretty regular occurrence, right? And we're gonna put some numbers to these as well, so you can kind of see how they play out as well. But the third and final, and maybe the scariest option, is that the borrower defaults on the loan, and you have to claim the property as collateral to recoup your investment. Okay, these are the only three outcomes that can come out of a note investment. They look different. You may be approached with them in different ways, but at the end of the day, this is what it boils down to, one of these three. Okay, so we're going to go ahead and go back to our case study. We're going to apply each of these outcomes, and we'll see how it plays out. Okay, so the first outcome is number one, pay as agreed. Again, your borrower, they know what they're getting into. They have your payment on time every month, no problem. This is ideal, right? It's a beautiful thing, right? You have your monthly payment of $1,032 a month. You have 15 years remaining on this note. That's 180 months or 180 payments, right? At the end of that term, you're looking at just shy of $186,000. Okay, you subtract your investment amount, your 89K, from the 185, or excuse me, well, 186-ish, right? And you're looking at an annual return of 11.37%. So we're already starting off hot with double-digit returns, right? The second outcome is that the borrower pays off the loan early, right? So let's say you've collected monthly payments for 5 years, everything's going well, and then your borrower says, we're ready to go somewhere else, right? Maybe the kids are out the house, or they just want to try a different area. But at the end of the day, they sell the property after 5 years, okay? What does that mean for your investment? Well, you've already collected 5 years of payments, right? So you've collected about $1,000 a month for 60 months. We're looking at just shy of $62,000 in passive cash flow that you've collected over the past 5 years, right? But if you've ever paid off or paid down any kind of loan, you know that part of your monthly payment goes to principal, part of your monthly payment goes to interest, right? So even though you're making your payments, the amortization of the loan is not going down at the same rate as the amount you're paying because your payment is being split. So when you bought the note, there was a $108,000 balance on there. Even though you've already collected $62,000, the note principal has only gone down by about $23,000. So you're still owed $85,000 on this note. Okay? So that means if you take the cash flow that you've collected over the 5 years, you collect the remaining balance at the payoff after their sale or after their refinance, you're looking at a total of just shy of $147,000. Okay, and your total collected. All right. You subtract your investment amount, your $89,000, you're looking at about $58,000 in profit in 5 years, 60 months, right? That gives you a return of 13.29% per year, okay? So when things went the way that we hoped that they would go, right? Pay as agreed, we got 11%, okay? We got a gift and we got paid off early. We're looking at 13%, so we're trending in the right direction if you're following me, right? Very good, very good, very good. And then the third outcome, the scary one, right? Life happens. Unfortunately, life happens. People end up in adverse situations where they can't afford to, make their payments and stuff. And we have to deal with that. That's something that we take on as note investors, right? So let's say after that same 5-year period, you've been collecting your monthly payments, and after 5 years, your borrower is divorced, and they can no longer afford to make those payments, all right? Well, what do you do here? Okay, at this point, you're going to have to claim the property as collateral. Now, let me pause and say that we're not jerks, okay? We're not here to kick people out of their property, right? in fact, we have a number of remedies that we will try to apply before that big red foreclosure that you see on the picture. The great thing about being a note investor is that because we are individuals and not institutions, we can deal with borrowers on a more personal level, right? And really try to get to understand their situation, how we may be able to make an adjustment or help, and hopefully keep them in the home, right? So we have a method called cash for keys, right? Hey, it would cost me X amount to foreclose on you. How about I pay you X amount to sign the property over to me free and clear, no foreclosure, no eviction on your record. You can start fresh somewhere else. Or maybe the person living on the home passed away, or maybe they have to move back in with their kids or something, right? And nobody wants to take care of the home. We have a process called deed in lieu, where hey, you can just sign it over. Don't worry about the rest of the loan. Just sign the property over. We'll take care of it. There's a loan modification where hey, okay, you lost your job or you got injured and you've been out of work for a while. Let's take a look at your situation and see if we can modify the loan to something that you can pay, right? So we do have other options before foreclosure. We're not here to just, we're not large institutions. We're a bank, or a bank would say, hey, pay us or give us the house. We don't really care, right? We work on people with a more personal level. But at the end of the day, we do claim the property as collateral when the borrower cannot pay. And at that point, we can do anything we want with the property. So we can sell it, we can rent it out, we can donate it. If you like it that much, move it in or turn it into a B&B, right? But the majority of the time, we're going to go ahead and sell so that we can get our money out and go ahead and make a new investment, right? So let's say that we sold the property for $142,000. Now, take note that it has been 5 years, so there's a good chance that the property has appreciated well past 142. But this is the number that we started with, so this is what we're going to stick with for now, right? So you sell the property, you get $142,000 for it, right? You've already collected your 5 years of monthly payments, so you've already collected your $62K in cash flow. We're gonna go ahead and subtract realtor fees because they helped us sell the home. We're gonna subtract legal fees because we had to go through the foreclosure process, right? So we're gonna subtract $13K for that. But at the end of the day, we're looking at a total collected of $191,000. Okay. Again, we subtract our amount invested, our 89K, from that 191, right? And you'll see a total profit of just shy of $102,000. Now you'll see the profit says 72 months. We're going to assume that the foreclosure and sale took an extra 12 months, right? But for a six-figure profit, I'm willing to wait. I'm assuming you'd be willing to wait. Maybe I'm wrong. Tell me if I'm wrong. But we're looking at a six-figure profit here, right? In 6 years, 72 months, right? And this turns out to a 15.84% return per year. Okay, so if you follow me here, when things went as expected, we're looking at an 11.37% return. Okay, when we got a gift and the loan was paid off early, we got a 13.29% return. Okay, and when the borrower failed to pay and we got inconvenienced and had to do a little extra work to work it out, we got our best return at 15.84%. Okay, so hear me when I say that note investing makes it difficult for you to lose. Okay, not impossible, difficult. Okay. So moving on from that, earlier I said that note investing is considered to be the best kept secret in real estate investing, right? That was only half of the secret though. Okay. The other half is you can profit from note deals without doing any deals yourself. Okay. You're probably sitting there going, yeah, this sounds good, but I don't feel like learning a whole new investment strategy. Or I don't have the time to do so. And I'm telling you, you don't have to. Okay. You can profit from note deals without doing any deals on your own. Okay. And how does this work? Okay. As a note investor, I get deals sent to my inbox every day. And sometimes there's a situation where I see a good opportunity, but I just deployed my capital into another note, right? Or I see a good opportunity, but it costs a little bit more. It's a bit larger than what the capital that I have on hand, right? And so instead of sitting there going, dang, that would have been great. I wish I could have took that down. I guess I just got to let it go. Instead of doing that, I reach out to my network and I say, I wonder who's interested in making some passive income. I wonder who would like a little monthly cash flow, right? And so I reach out to my network and I say, hey, I have this great deal that I'd like to take advantage of, but it's going to require a little bit more capital than I have on hand right now. I was wondering if you'd be open to partnering with me on this opportunity, right, and supplying the capital to take it down. You don't have to do any work, all right? I'll do all the work. All you have to do is provide the capital to close this deal, right? And for doing so, I'll give you a monthly payment. I'll pay you every month for as long as we're in this deal, right? And people say, sure, that sounds good. I don't have to do anything. I get to earn a return on my money. It's secured by real estate. Let's do it. Sign me up, right? And so these people are my private lenders. Yeah, 6,000 emails is insane. But hey, the inbox gets filled up and we don't always dump it out as quickly as we should. But these people are called private lenders, right? The private lenders are people with some money to invest, interested in, again, hands-off passive income. They don't want to do the work themselves, but they want the return. Maybe they want to invest their money for a limited time, right? Maybe they just closed on another deal or sold a property or something, and while they're trying to figure out where they want to move next, they want to make sure that their money is getting some return, right? It's working for them while they wait and figure out the next move. They want to profit from the expertise of others, right? Again, I don't have the time or desire to learn how to do this, but I'll invest in it, right? And they want secured investments with high returns, okay? Because you can be a private lender on anything at all. If your brother calls you and says, hey, I'm building a new pool in the backyard. I need 20 grand to get it done. Will you loan it to me? I'll pay it back, right? You can say sure, but if your brother doesn't pay you back, then you can't dig the pool up out the ground and take it with you, right? So we're talking secure investments, okay? Now, these private lenders typically have some money stashed away in savings. Now, let me say that if you have money sitting in a savings account that you can just walk into the bank and open up, you're losing money. You're losing money every day. The average savings account returns less than 1%, and inflation hovers around 3%, right? So you're losing money if your money's just sitting in a bank account. If you have a high yield savings account, you're earning 3 to 5%, which is good, right? Which is good, but we can do better, right? Maybe they have some money sitting in an old retirement account from an old job, or maybe they have a self-directed retirement account, right? And they're not getting the returns that they want out of their retirement account. Or maybe they just took a pretty hard hit, and they want more security, or they want better growth with these retirement funds, because again, these are funds we don't want to play with. These are our retirement. These funds are made to, or intended to, make sure that we can live, our golden years. I believe that's what they're called. Live our golden years, stress-free, and have enough money to take care of us. So they want to make sure they're getting a good return, they're getting that security. We don't want to play with that, okay? Maybe they have some money in stocks and they want to take some of it out and put it in a more secure vehicle. Maybe they took a hit. I know, in the market crash that happened a few months ago, I talked to a guy who lost $200,000 out of his stock portfolio, and there's unfortunately no telling if he'll have another 10 years, 20 years, or however long to not only earn that money back, but pass where he was before, right? So maybe a stock investor wants some more security for their money. Maybe they have a life insurance policy that they can borrow against. $1 million life insurance policy, they want to borrow $100K against it to earn some of that passive income, right? And then again, maybe real estate investors. Okay, maybe they're tired of being a landlord. They're sick of dealing with their tenants. All right, maybe they're a wholesaler or a flipper, and they're tired of putting in all that work to get paid one time and then go have to do it again and again. And so they talk to a note investor, and we'll say, hey, what if you took half of your profit from that wholesale deal or that flip deal, you put half of it in your pocket, put the other half in a note investment, and now that same deal is paying you over and over again for several years. And then what if you did that with your next deal and your next 10 deals, right? And all of a sudden, you have this passive income coming in where if you decide one day, hey, I don't want a wholesaler flip anymore, I'm tired of it, or I need a break, you don't have to worry about not having any money coming in because you know that you're getting that passive income. So real estate investors make great private lenders, okay? But we're going to go back to our example. I'm going to give you a private lending example here just to tie it all together with some numbers, right? This here is Eddie, okay? Eddie is an engineer. He works very hard. He makes some pretty good money. Eddie wants to get into real estate investing, but he just does not have the time with his job. He's just too busy, right? And so I call Eddie and I say, "Hey man, I had this great opportunity. We talked, and you said you wanted to get into investing. Would you be willing to loan me the money to take down this deal? And for doing so, I'll give you a return every month. I'll pay you every month for helping me out." Eddie says, "Sure. I have some money saved in my self-directed IRA account. I'm looking for a better return than what I'm getting right now. Sure, I'll go ahead and loan it. How much do you need?" I say, "Eddie, if you'll loan me $89,000, I'll give you an 8% return on your money." Eddie says, "Great. My money's earning 5 right now. That sounds good. Okay. But how much does that work out to every month?" Say, "Okay, you're looking at $850 a month. Okay. For loaning me this money, you're looking at $850 a month. Now remember, our monthly payment is $1,032 a month, right? So Eddie's receiving the lion's share of that monthly payment, that monthly mortgage payment, right? As the note investor, I'm taking the small share, doing the work, but I'm taking the smaller share, okay? Because these things stack up. These things stack up. Some people may say $180, that's nothing. Why would you do all that for $180? But you do enough of them, that 180 multiplies very quickly. I mean, to some people, 180 is a bill. Maybe it's a phone bill, maybe it's groceries. But don't sleep on any small amount of money, because those numbers do add up, right? But at the end of the day, I say, "Okay, Eddie, I appreciate you for this. How long were you thinking? How long would you like to do this arrangement with me?" Eddie says, "Well, I'm still pretty young. I can't touch this money for a long time anyway. Well, let's just ride it out. It's in my retirement account. I just want to let it grow. Let's just ride it out." Say, "Okay, that sounds good." So Eddie loans me that money, and he receives his $850 a month for 180 months, right? For the next 15 years, for the duration of the loan. At the end of that loan term, Eddie's $89,000 has turned into $150,000. Okay. All the while, he's received his passive contributions to his retirement account. It's been growing contractually, because not only do we have the agreement on the mortgage note, right? Eddie and I have a contractual agreement between each other, between us, that says, "Hey, Eddie has agreed to loan me this money. I have agreed to pay him $850 every month. In the event that I'm not able to follow through, or that something happens to me and I fall off the face of the earth, Eddie has the right to take my place as the lender on this loan, on this note, and he still collects his monthly income. He can go after the property if he needs to, right? But Eddie has contractual security in his investment, right? Again, no market volatility. No market volatility. Eddie is not playing around with his retirement funds. He is not dealing with stock market swings or anything like that. All right. He knows that every month he's collecting those monthly payments, and his account's just going to keep stacking and stacking and stacking, right? He's helping to provide a family with housing. Okay. This is underrated, but a pretty big deal as far as being a lender goes. Because every time a borrower, a homeowner, makes their monthly payment, okay, they're building equity in their home. And building equity in your home is how you build wealth. All right. So you're helping to provide a family housing and build their own wealth as you earn your monthly payments and build yours. Right. And then again, at the end of the day, in the event that the loan doesn't work out, that the note doesn't work out, and the borrower defaults, Eddie knows that he has valuable collateral, right, for his investment, for the money that he loaned, so that he's not out of $89,000, should the investment go south. So he's feeling really good about it. He feels secure. He's happy. He's earning a higher return in his account, right? And who knows? Maybe down the line, when he has some more money saved up in there, he says, "Hey, let's do another one. You got any more of those notes?" That's typically how these relationships tend to work. Okay. So at the end of the day, I say all this to say that I'm always on the hunt for good deals. Okay. And all I'm asking is, can I call you when I find one? Okay. Again, my goal here is to create freedom for myself and for others. It is to build wealth together. I'm a very strong advocate for community and collaboration. And so when I find these opportunities, I want to spread them to whoever may be interested in taking advantage, right? Whoever may be interested. And so when I find a deal, can I call you? At the end of the day, we have a limited number of days. Let's just call it what it is, right? We all have that day that's going to come, and it's time to start living life on our terms, the way that we want to live it, as soon as possible. Okay? Each and every one of us deserves more freedom, and it's possible, and it's closer than we think it may be sometimes. Okay? So, I say this to encourage you and to encourage myself. So let's take action. Let's move. Let's think in a mindset of abundance. There's plenty out there for all of us to eat, and all we got to do is go and get it. Okay? So thank you for spending your time with me. I really appreciate it. If you have any more questions or want to schedule a call with me, you can visit my site, note-genius.com. You'll see the schedule a call button there. Or you can just email me directly, brian@notegenius.com, with any questions. Please follow me on social media, Instagram or TikTok @note_genius. You can subscribe to my YouTube channel or my Facebook, where I'll be posting clips, interviews, tips. I'll be doing vlogs. I want to be very authentic with this, so I'll give you the good and bad of any deals that I bring along. I want to be very genuine in this sharing, right? Thank you again for staying. I do have free ebooks in the description. If you want to go ahead and go down there, download your 3 free ebooks. They will kind of expand on what we talked about here today. But with that said, again, I appreciate you. I hope that your week starts off strong, and you have a great week coming up tomorrow. Please feel free to reach out to me with anything, and I hope to talk to you all again soon. Thank you.